Hello traders, if you haven't heard yet, this Tuesday I will be doing a private live stream for everyone who has the Delta Neutral course. Additionally, my Delta Neutral course is currently on sale for 20% off. So if you want to go grab that sale, join the Passive Income Mastery and become Delta Neutral, you can go watch that. All right, with that, let's go talk about a common investor and trader fallacy today. A lot of people look at a chart. Seasoned veterans and new traders and new technicians are going to look at a chart and say the price is high or the price is low. And what they mean by that is when the price is high, they think about selling or taking profit. And when the price is low, they think about buying or adding to their position. This is not exactly a fallacy, but it is something that probably is on a lot of investors' mind that that's how they think. Certainly that's how I think. When I see a large price drop, I'm saying, hey, look, it's bargain, it's at a better price for me to buy more. But in reality, that's not really how markets work. I believe that a lot of investors and traders believe that markets are much more cyclical than they actually are, especially traders. The markets aren't as cyclical. They don't go up then go down, so meaning that every down is a good price to buy and every up is a good price to sell. Even when you look at a crazy uptrend that did happen, everyone knows about the 2017 uptrend, the best time to short would not have been during the uptrend, because trying to counter against crazy buying is typically suicidal. And trying to buy against crazy selling is, again, typically suicidal. So if you say, well, Bennett, what's the best time for us to actually trade against the herd? When the price begins going down and people say, oh, it's a bargain for you to buy at that price, that's a common sign that the market might just continue plummeting. And we got some of that here on the weekly. You can see price went down a bit, and then when price goes up here for this week, a lot of people say, hey, we should have bought here. Why didn't we buy here? And everyone who did buy here is probably very happy. And then we get this candle that traps everyone who had bought here late or bought here even early on a dip. And then we completely trap them with these candles here. It may seem strange to look at this chart and say this is the best time to sell, but this would have been actually a very good time to sell and to participate in the downtrend. Had you sold at 12K, 2020 hindsight, pun not intended, but that would have been a phenomenal sell. And if we look at an uptrend like this, something like, let me go to the daily and show you guys. A lot of people think that, oh, prices are too high. Oh, this is perfect right here. When price jumps up to here, we're trading at around the $4,000 range and people are thinking about buying. Then price jumps up to the 5,000s. Maybe many of them are saying, hey, the price is too high now. Or maybe if they don't think that's too high, well, when the price goes back up above where it had previously rested for quite some time, a lot of traders and investors might be saying, I don't want to buy here because the price looks too high. And they might even sell. They might even take profit and say, hey, the price is a lot higher. It might not always be this high. And price ends up doing that. Another common example with a round number, look at this. If we look at the daily right here, we can see that price went above 10,000 for about a week or a few days. Now, when price dipped below 10,000, a lot of people were saying it's a bargain to buy below 10,000. You're not going to get this opportunity again. What ended up happening is price goes below 10,000 and then it just, we have a stop loss on to hunt any shorts right above 10K, and then price just falls apart. So clearly it was not a bargain to buy just below 10K. This would have actually been a pretty good time to sell. So this is really flipping that mindset on its, on its back. Now I'm going to show you guys some data that you might have seen before, but I find this pretty insane. This, I think, is just confirming the fact that a lot of traders think like this. Look here at the global long-short count ratio. This is of all Binance accounts. I've showed you guys this many times before, but for anyone new who doesn't know what this is, this takes a look at each individual Binance futures account, tags it as either long or short on Bitcoin, if it's trading on Bitcoin, and it looks at the percentage of accounts that are long versus percentage of accounts that are short. Now, if we look here, you can see when prices are rising, what happens to the percent of accounts? They go down. Why? Well, you best believe that any longs are probably taking profit. Shorts are probably saying these are great prices to short at. Why short here when I can short here? I'm getting a better price now, even though that's not how the markets work. They don't work in this cyclical kind of fashion. But look what people did. They just shorted, and they kept shorting like crazy. And then if we look here, another famous one, well, not famous, but famous in my mind, price goes down from about a little below 7K here, guys, down to, what is that? 6,500, perfect. And what do we see sentiment do? As price is clearly falling in this candlestick here, sentiment is very clearly rising from about 0.7, meaning that 70%, 0.7 would be, okay, now I'm doing the math. 0.7 means that for every one short, there is 0.7 longs. And a ratio of 2 would mean that for every one short, there are 2 longs. So basically here we know that there aren't many longs, and then they all start buying because they're getting better prices as price falls. And yeah, and then we can see this is pretty sick, but look here. Just before price rises and just as price is beginning to rise, we get a just dip in sentiment here. We go from about 0.78 down to about 0.6. So really a lot of people just sell or short right before this rise. But that's not really the purpose of this video. The purpose of this video is to show that it's not always a great idea to buy when the price drops and not always a great idea to sell when the price rises. Even if it's on something like gold, the S&P, the Australian stock market, any kind of commodity, silver, just anything, oil, you name it. They have trends and they have cyclical patterns, and it's hard to distinguish when one is going to occur versus the other. But you can change your thinking, and that will already put you way above of many traders who just go on their gut because it looks low or it looks high. And you can see continuous sentiment patterns here, that as price rises a bit, sentiment falls. So this is something that has been occurring and has been always occurring. I've noticed it happening on the 5-minute, the daily, the 1 hour, the 4 hour. When you look at sentiment, meaning looking at the data for how many people are buying and selling, looking at social sentiment, looking at what people are saying. Oh, this coin is a bargain below this price. Oh, you should definitely sell above this price because the price can't go any higher. Things like that are really a sign that you could be having an opportunity to bet against the crowd. So with that, hopefully next time you see a very, very strong downtrend, you don't decide to be a hero and try to go long the downtrend because you're getting a better price. With that, you can check out my Delta Neutral course. And remember that low prices and high prices, they're just prices. Trade wisely.